Hello everyone, it's Evan here from the Trade Risk, and this is your stock market weekly update for Friday, February 23rd, 2024. Hope everybody's doing well out there. On camera today, I'm feeling good. Finally shook this cold that I've been plagued with for the last few weeks. Also feeling good because markets are back to fresh all-time highs. S&P 500 notching another record close here for the week on the heels of NVIDIA. Those earnings out, and of course we see now in hindsight 16% pop following those numbers. They were impressive, as I think we all sort of expected. It was really the market positioning going into this number. It always is. The old adage is you can sort of know the numbers ahead of time sometimes, and you still won't know exactly where the stock's going to go. Clearly, NVIDIA's case, new highs here. I think it was 260+% of sales growth year over year, and like 400% of earnings per share increase year over year. Just absolute monster numbers, but that leading the charge higher. We got an interesting sort of setup here in long-term bonds, I think, trying to make the turn this week. We're starting to see them stabilize and really start to turn up here on Friday. Those were the bond ETF, aka yields going lower. We're going to talk about that in this episode. We had an inside week for the Russell 2000. We've been talking a lot about the Russell 2000, so we'll revisit that this week. And we had the first down week for the US dollar all year, if you can believe it. So lots to talk about. Stick around. Let's get into it. All right, we've got some charts in front of us. We're back here. TC2000, that is the charting platform we're going to be using throughout today's video. For you new users who might be joining us for the first time, thanks for tuning in. First off, we do a lot of support for the platform. We are sort of informal partners with TC2000. So if you need tutorials, education, walkthroughs, custom indicators, scans, all kinds of stuff, reach out to us, head to thetraderist.com. Admittedly, my backlog is a little bit long at this point, but if you do need something, I'll certainly get a response to you and help you out. We do support traders in lots of different ways. So thetraderist.com is where you can find all that information. Let's get into the numbers here for this week's trading. If you follow my mouse here, you can see again, just a general positive week here for most of the market. Dow Jones, S&P, Nasdaq, all up basically 1.5%. The Russell 2000 was the standout on the downside, underperforming this week. Goes against some of the analysis and make the case sort of that I was making in the last couple of weeks that we would see some outperformance, but we'll talk about that from small caps, that is, in just a little bit. Down almost 1% this week. If we take a look at volatility, some positive signs here, just kind of seeing, you know, the fear kind of come back out of this market. Nasdaq vol was down almost a point, and so was the VIX. So that was nice to see, back below 14. If we take a look here at our sectors on the week, you can see green across the board. Very rare do you get full green across the board. There's always a standout one or two. On the top, believe it or not, this week was consumer staples. You may not have thought that looking at the headline, NVIDIA, all the kind of risk on, S&P at highs, but consumer staples were moving this week. So we saw a 2% move up. We saw materials and industrial. So again, a very kind of curious mix here in terms of the things that were leading us or outperforming on a relative basis to the upside. On the downside this week, it was energy, still up 0.5%. Real estate, which I do want to talk about because I think that's an interesting setup as well, up 1%, and communication services up 1%. Those were the laggards on a relative basis. Now, if we take a look here at our sector trends, so this is our custom Trade Risk Smart Trend Filter. We have it built out for TC2000. We also have it built for TradingView users. So if you do like this indicator, you can get it from our website on either platform. Really just helps us measure path of least resistance, trend strength, and does a little bit of smoothing with some price action relationships, but it really kind of simplifies and cleans up the noise. And really the big standout here this week, or one of the turning points, was real estate. So it's actually in the top right. You can see that we are starting to get a transition up. We're getting some green sort of buy up signals freshly printed this week. So I want to talk about the real estate sector a little bit later in this week's video. Everything else really sort of just kind of meandering along in the same sort of state it's been. Technology, I mean, we briefly got a little whipsaw here, which is usually kind of rare on these trend signals, which is why we like this indicator. We did get a sell signal produced here on Wednesday going in front of NVIDIA earnings, and then of course we got a fresh buy signal printed shortly thereafter. So most of the trend signals kind of staying the same there in terms of the sectors. Now, if we take a look here at market breadth and internals to the market here, always start in the bottom, which is our 52-week highs and lows across the NYSE. And we're still seeing a nice, healthy relationship here. Breadth is an interesting thing because there are lots of people shouting breadth stinks, breadth is lousy, and there's 7 stocks moving on the market. And when we look here objectively at this measure of breadth, and again, it is this measure of breadth. If you're not looking at 52-week highs or it's not important to you, then sure, we can, come to some different conclusions based on the indicator of market internals that we're all looking at. But when I look here at the number of stocks hitting 52-week highs, this is an improvement. The last few weeks, right, has been an improvement objectively here. Now, if we take a look here, you can see again, we're starting to get up to almost 1,000 or more. Every trading platform is going to have some different numbers here. So maybe if you're looking at this, it's 700 or whatever that threshold is. You're looking at, is there volume in that issue? There's lots of things you could disqualify lower issues and lower floats and small companies and, low volume. But generally speaking here, this ratio is fairly constructive. Now, I'd like to see more, always want to see more, always want to see more new highs, want to see more of a flurry like we did all the way back here. If we go back to the 2020, 2021 times coming out of COVID, right? We had many days readings over 1,000 here. So if we can get more, kind of continuation, I think that's constructive. We talked about the fact NYSE Composite Index, all-time highs here, finally breaching back above the 2021. You can't quite trade this index per se, but again, it's a measure of market breadth. So I still like what I'm seeing here under the hood relative to really any other time in the last 18 months, let's call it. Now, if we move on to our sponsor, Investors Business Daily. So shout out to them. They are a sponsor of the show. They help make this content possible. You can support us, support them with a link in the description of this video. But if we take a look here at their IBD 50 list and we take a look at their sorted ranked 1 to 10 top IBD stocks, GCT, GigaCloud, this one was interesting this week. I don't know if anybody followed it. We can look at the chart later. Down 6%, but I think this started the week down some 30%. So, that was quite a roller coaster there. I didn't quite catch the news on what drove it, but this is their top 10 stocks doing pretty well. They update this list pretty much daily. So if you want to be on top of the top ranked stocks, top moving stocks, check out the link in the description of this show. Now, if we move on to commodities and the dollar here, we saw the DBA agriculture ETF at the top of the list here, followed by natural gas having an up week, but sadly gave a lot of it back. Gold was up nicely this week as well. Same thing with copper. On the downside, again, we finally had the dollar index down this week. I think that's nice to see. We also had silver, oil also down, Bitcoin down 2% as well. Lastly here, in terms of treasury yield, so it's one of the things that we want to explore a little bit further here, is that it looks like we're getting a little bit of rollover action here across treasury yields. This is going to be something that we want to keep a close eye on here, and we're going to look at some of those bond funds in just a little bit. So let's get into some of the price action here. We're going to start it off with the S&P 500. Here it is, back to all-time closing highs, going out above 5,000, 5,088 to go into the week. If we go to the daily chart here, you can see just an absolute monster. All the gains this week really coming from Thursday. This is post NVIDIA, and you can see us really sort of reaching up here with this big gap and go session. Matter of fact, this is one of the best performing days. This is over a 2% day for the S&P 500. Now, I know it's kind of, weird to say because the S&P 500 has been on such a strong tear to the upside. But if we take a look at rolling returns here for the S&P 500, and we look at the single day, just in terms of single day 2.1, 2.2% moves, you got to go back pretty far. You're going back a couple of years, really back to 2022 when you saw the S&P 500 up that much. Now, I know it's ironic to say the S&P 500 has already been up pretty much every single week since October. But it is notable there that we had such a big move, which maybe speaks to some of the offsides action that we saw going into just the key earnings report. And we also had the Fed this week also, where we got the Fed minutes released. So we had a little bit of a more granular view looking at some of the conversation there going on at the Fed. All that aside, when we look here at this price action, you can see nice gap up. Again, we had basically in terms of consolidation here for the S&P 500. That's what we got. I mean, we basically got, one, two, I can't even really count this day. I mean, it was 1, 2, 3, 4, 5, 6, 7 days of digestion of some chop, of a little bit of two-way trading and a little bit of volatility. Now, meanwhile, while we were in this range, I mean, like we talked about last week, we did see the VIX get all the way up. Can you imagine? All the way up to almost 18 intraday here, just in this very mild consolidation taking place here. And I think, again, it speaks to the fact that I think a lot of investors right now are still looking to be very quick to the exit door at the first sign of fear or fright. I think there's still a lot of uncertainty in this market. Even though we continue to ratchet higher here, it does feel like we're really sort of climbing the wall of worry in the S&P 500. So here we are, a little bit of a digestion going on. And then that nice pop up, new closing highs. Short-term traders, but I'd just be paying attention to very simply is essentially the lows from Thursday. Call it the highs from the 12th of February, right in here. Basically 5,035, 5,040 or so. If we can stay above here in the S&P 500, then I think the momentum party just continues to ratchet us higher. If we fail abruptly, if we come in, we see some heavy selling and we start to reject back down below these highs into this range and we start filling this gap below the lows from Thursday, then in the very short term, I think that would again take the momentum out of this market and you have some cause for some short-term concern. Again, this is short-term price action. Longer term, you're still in a monster uptrend. There's got to be more damage to be had to be concerned longer term, but I think that'd be the point of kind of control that I'd pay attention to. Nice upper level, tight, kind of risk we can measure basically to a percent below where we currently are trading. So that's the way I'd look at the S&P 500. Ironically here, even though NVIDIA technology did very well this week, we don't really have the Nasdaq 100 as, excited here on the upside. It's not clearing through these prior highs. In fact, on Friday's session, we closed below where we closed on Thursday. So we did see maybe a little bit more exhaustion here. Last week, we talked about the fact that we would love to see the Nasdaq 100 digest a little bit, looked a little tired, looked like it could just consolidate. And it still seems like that. It seems like, to me, the Nasdaq 100 is feeling a little tired here, even though NVIDIA is trying as hard as it can to keep this momentum and this party alive. So it is curious to see the relative outperformance here for SPY this week versus Qs. Qs, again, I wouldn't be surprised to see, just based on this Friday's action, I still wouldn't be surprised to see this gap kind of get filled over the next week or two and just kind of chop around in this range. Again, I'm not short. I don't want to play for the gap fill. I'm long Qs or a lot of things in this market, perhaps. So, I wouldn't want to be trying to fill it, but it feels like, at least in the short term, it wants to just cool off. Russell 2000. So Russell 2000, last week we talked about the fact, the last 2 weeks, we've been calling for some rotation, some small cap outperformance, some catch-up trade, if you will. And I still think that that trade can play out. Last week we talked about the Russell 2000 even coming back, checking back to this range into the 190s, lower 190s, and still being okay from a bigger picture perspective. And I still think that's the case. They were the underperformers this week, and we'll see. Clearly a little bit early on this trade, but I think that we are still going to get another good retest and potential breakout of this upper resistance. Might take another week or two, right? But I think that we can still play some catch up here. Zooming out, right? Above 190, in, you know, ideally lower 190s. If we can hold above here, consolidate in this range, fuel up against this big level that has been resistance for the last year and a half or so, I think all the better in terms of getting ready for a nice breakout. So let's keep an eye on it right now. And for now, in the very, very short term, I think you're just in a messy kind of choppy range, and you really got to start pushing back above the twos to get more excited against this resistance. So let's see if that happens. For now, Russell 2000 is just kind of stuck range bound. So that's really the read there for all of the markets. We already sort of talked about the VIX. You can see that's coming back down below 14 now, got again as high as almost 18 just about a week ago. So we saw a little bit of fear kind of coming back out of this market. I did want to talk about TLT because I think it's interesting here. So this is the long bond fund. This is the longer side of the duration trade there for interest rates. And you can see that on Friday, particularly, I was up 1.34%, really sort of just consolidating this big kind of pulling back in this pullback consolidation pattern really throughout this entire year. So we sort of topped out coming into the year, and now we've been in this pullback mode. And so for TLT, it looks like it's trying to make a stand here, which again, zooming out from this big picture, if this was the bottom or an intermediate bottom or bottom for the next year or two, at least for TLT, we had this nice drive up, multi-month, right, multi-week sort of pullback here. And if we can start to shape up on TLT and start resuming the primary trend from November, December timeframe, then this could be good for lots of different kind of growth areas, small cap, right? This kind of boils into that theme for the market. So let's keep an eye on it. Again, it's still very early. It's just one day. We need more follow through. We need more volume. We need more commitment here, but it's something that's certainly starting to play out. You can see it also on the IEF or the shorter duration bond funds, a little bit less so. So really it was the duration that saw that move on Friday. So I think that's interesting. Gold, I also think is starting to shape up here a little bit. So gold, if we zoom out, this is a weekly chart. You can see it's basically gone absolutely nowhere since the start of December. It's been kind of hanging out pretty much near its all-time highs. It's been taking its time up here in these low 190s, consolidating, and we finally got a nice kind of move up here. It's actually been up about 5-6 days in a row. So we, yeah, it has been up about 5-6 days in a row. So starting to try and turn the corner here. Again, it doesn't quite have that momentum just behind it yet, but it's something we want to pay attention to as we look forward. Now, let's get into, actually, I did want to highlight one sector here. So before we look at some individual stocks, I wanted to pull up real estate as the sector. Real estate here, you can see, is kind of at an interesting spot. Again, we talked about earlier when we were looking at the sector trends, we got a transition up. We got sort of a fresh buy signal there on the smart trend filter. Well, if we take a look here at the price action, we look at XLRE. There's a few different ETFs you could use. You can see this has been, you know, kind of basing out, bottoming here. And it looks like after this week, it is trying to start to turn up here. Again, it had this nice rip along with lots of other things from November into the new year. It has been cooling off since the new year, and we're finally starting to get kind of a weekly rotation up here. So it's something to keep an eye on. Keep an eye on these individual stocks. Looks like it needs a little more proof momentum kind of buying to get more excitement here, but you could look at some of those individual stocks. We've got a bunch of different layouts on our website if you need help kind of drilling down from a sector top level basis. So that is everything I want to talk about on big picture things. If we take a look at some individual stocks, we'll take a look at NVIDIA since we've talked so much about it. You know, on Friday again, or let's say Thursday, you get that big post earnings pop. Notably, you know, it did give back, or it was in about 11% pullback going into its earnings. So, you know, if you think about where it was right before it reported earnings, you know, you kind of closed the week up 5%, right? So you basically just had a little bit of profit taking, maybe a little bit of fear kind of coming in to a big catalyst earnings event where you had some folks just kind of risk off going out, going into an event after a huge run, pulled back 11%, and then post earnings, it kind of just reset itself. It did reset itself higher, of course, but I think lots of folks are just really going to be keying off of NVIDIA's strength here and momentum as a proxy for this mega cap tech trade. And I think, again, kind of like the Qs, 750 or so, if it starts, or like we talked about in the SPY as well, if it starts breaking down below 750, if we start getting back into a gap fill, losing the highs here from February pre-earnings, that's a easy level you can use to manage risk and to measure sort of risk appetite for particularly these stocks specifically. And so if it's above 750, it's tough to want to short. Really is. It could just go as high, pick a number. It can just continue to find more buyers, find momentum, and really sort of just suck in this reflexive trade up. If it starts breaking below 750, then I think you got something to work with there. So I would keep an eye on that. Not everything was good this week. We had things like Palo Alto, which really spooked markets and investors, and their this was post earnings as well. Their earnings numbers weren't really that terrible. Certainly not for a 30% move lower, knee-jerk move lower, in my opinion, but certainly had a bit of a reset here. Again, it's been a monster move to the upside, maybe lots of complacency really kind of creeping in, but you do have stocks that are resetting itself. So technology, again, maybe just looking for an excuse to kind of breathe a little bit while you have NVIDIA just trying to move things up. We also had Square breaking out on Friday as well. Smaller company, up 20% on the week, post earnings, good numbers, kind of beat street estimates. I do have a holding in this position, so Square's kind of in one of my longer term kind of investable buckets. I've liked this company as it's been consolidating here, trying to form a base, and really needs to get over kind of 85 or so, 90 to start rebuilding some of that momentum and enter a new kind of uptrend. So Square, nice positive move there. And then Carvana, I just got to talk about it. Carvana has been probably the most impressive turnaround story I have seen in a very long time. This is up from just over a year ago, about a 1700% return, I believe, 17x, from about $4 a share at the end of 2022, where everyone was writing this off as a zero, a company that was going to go bankrupt. There was no way they were going to make it. And we just have seen just such an epic stair-step climb up and just squeeze, really a squeeze higher. I don't even know if they're making money at this point. I don't even think they're profitable, but it is just hilarious to see such a big move here, and just how when everyone was convinced the stock was going to zero, it has, pulls out a 17x. So congrats if you were in this trade. I have no position, haven't traded it. I don't think I've ever owned it, but what a monster move. Reported earnings and was up 30% here on Friday. So very, very impressive. So I think that is everything I wanted to talk about. Woo, excuse me. Thanks for making it this far. I need a swig of water. Almost got to the end. Thanks for making it this far. Leave a comment, as always. Let me know what you're looking at this week. What did I miss? And I appreciate you tuning in every Friday, long-form market analysis videos just like this. If you like it, if you loved it, share it, and give that thumbs up. And have yourself a great weekend. Thanks so much for tuning in. We'll see you back here next Friday. Take care.